All right, ladies and gentlemen, welcome back. And we're still going to talk about the trade bracket strategy, okay? But before we do that, I have two disclaimers that I want to make, okay? The very first disclaimer is trading is very risky and you can lose a lot of money, all right? So this right here is not trading advice. Trade at your own risk, okay? The next what I want to say, the next disclaimer is I don't do account management, I don't do investments, I don't inbox people asking for money. So be aware of scammers, okay? Then lastly what I want to talk about is if you're finding trouble understanding anything that I'm going to be talking about in this video right here, okay, then you should go ahead and watch the very first two videos that I did make about this strategy, okay? Because those videos right there go in depth when it comes to explaining the ins and outs of the strategy, okay? So what I'm gonna do is I'm gonna leave the links to those videos in the description below, okay? All right, so let's begin. So if you know the strategy begins on the 4-hour time frame or the higher time frame, okay? And what we want to do on the 4-hour time frame is we want to mark our market structure, okay? And as you can see, price made a push, all right, made a pullback, okay, it made a push to the downside, okay? So until this point right here, okay, price created this break, okay, which confirms to us the overall bias of the market to the downside, okay? And if the overall bias of the market is to the downside, that means we shall only be looking for sales, okay? All right, so now let me go ahead and mark this market structure right here. Like I said, okay, this right here is the break on the 4-hour time frame. All right, so let me go ahead and put that on the chart. This is the 4-hour break. All right, this right here will be the 4-hour lower high. All right, then this right here will be the 4-hour lower low. Like I said, if you don't understand what I'm talking about, go ahead and watch those first two videos that I did make, okay? The links will be in the description below, okay? So until this point, like we said, we've confirmed the directional bias of the market is to the downside because it created this break of this low right here, okay? So the next move of the market will have to pull back. We expect the market to pull back, okay? And when it pulls back, we expect it to continue to the downside, guys, okay? And this pullback right here, okay, is what we want to capitalize on because that's where we shall enter and exit this trade, okay? So this pullback right here will give us our entry and exit of this trade, okay? But I want you to be careful, okay, because we're gonna go on the lower time frame, which is the 15-minute time frame, and mark this pullback right here, okay? So when we go on the 15-minute time frame, this pullback will be in an uptrend, okay? Now you have to be careful because this is where most traders get confused. It will be in an uptrend. That does not mean the price has changed its overall directional bias. No, it will just be a pullback to the upside so that price continues to the downside. Okay, so be careful. This is where most people get confused, all right? Because it will be making higher lows and higher highs, okay? So keep that in mind, okay? The overall bias of the market is to the downside, but the pullback, since it created a break to the downside, will be in a mini uptrend, if I can call it that, okay? All right, so now let me go ahead and go to the lower time frame. So I'm gonna go ahead and just delete this right here, okay? Because I want to go on the lower time frame, then mark the market structure. All right, so I just go right here and then go on the 15-minute time frame, okay? Then scroll back, okay? And this right here is in hindsight, guys. Okay, so what I advise you guys, you need to first go test the strategy on your chart, on your demo account, okay, before you apply it to your real account. Okay, guys, don't just go in and just apply this on your live accounts. No, make sure you apply it on your demo account first, and when you get comfortable, or when you learn how the strategy works, then you can go ahead and apply it on your live account. Okay, all right, so let's go ahead and mark now this pullback. As you can see, this is the structure we marked on the 4-hour time frame. Okay, and it's right there. All right, so let me go ahead now, mark the structure on the 15-minute time frame. It is very important that you learn how to mark your market structure. Okay, all right, so price made a push right here. Okay, made a pullback. Okay, made a push. All right, made a pullback. All right, made another push. All right, made a pullback. Okay, made a push right here. Okay, made a pullback. Made a push. Okay, so this right here is the market structure that we have. Okay, and I'll go ahead and put some structure points. So this right here will be the higher low. All right, this right here will be the higher low, and since I don't want to do that, I'm just gonna copy and paste. Okay, so Control C. It's gonna Control C, Control V. Okay, but I'm gonna do it so many times because I need to mark the rest of the market structure right here. So I'm just gonna Control V, Control V, Control V. Okay, so that I get so many instances. Okay, so I'll just drag this right here. This will be a higher low as well. This will be higher low as well. This right here will be a higher low. Okay, so go ahead and just delete this. All right, so let's go ahead and just delete that. Okay, then I'll go ahead and mark this as the higher high. Okay, same thing. Okay, what I want to do is Control C, Control V. I'm gonna do it so many times. Okay, Control V again. So drag this right here, then I drag this right here. Okay, then I drag this right here. Like I said, guys, price has not changed the overall direction. No, it's just pulling back. Okay, so let me go ahead and delete this. All right, it's just pulling back to the upside. Okay, but the overall direction of bias of the market is to the downside, so we're only looking to sell. Okay, and the only time we shall sell is when price breaks this last higher low. All right, so price needs to break this last higher low, then we should go ahead and draw our trade bracket, wait for price to pull back in a trade bracket, then take the trade. We shall hold that trade until the lowest point of the pullback, guys. Okay, that's how the strategy works. Okay, now at this point is where I want to talk about the alerts. Okay, the use of alerts. Like if you know the strategy, if you did follow the very first video that I did make about this strategy, we said we use alerts and pending orders to our advantage in order to trade this strategy efficiently. Okay, and what I want to show you is, let me go ahead and get my cross right here. Okay, as you can see, this pullback started around, I want you to stare down the this whole window. Okay, this trading view window right there, where it says Thursday, October 30th. Okay, 2025, and as you can see, the time is 8 p.m. Okay, so that's when the lowest point happened. Okay, then the highest point happened around Friday, October 31st, 2025, 3 p.m., which is the next day, guys. Okay, then the break happened around, as you can see, that break happened Friday, October 31st, 2025, 4:45 p.m. All right, so my whole point is the pullback. Okay, this pullback right here and the break takes some time. You don't want to be on your charts, okay, the whole day. waiting for all this to form, guys, waiting for this pullback to form. I'm waiting for this break to form. No, okay, that's not the best way to trade strategy, okay? And that's where the use of alerts come into play, okay? So let me go ahead and get my arrow back, okay? Like I said, we don't want to be on our chest the whole day, okay? Waiting for all this to form and, all this break to be created. No, all right? So what shall we do? We shall use alerts to our advantage, because as soon as price hits your alert, okay, your alert, where you set your alert, you will receive a notification, and you will come back to your chart, okay, and then execute the strategy, right, or execute the trade, or see what's going on. All right. Okay, so now with that being said, you want to come up with a time frame at which, a time interval at which you will be checking your chart. Like I said, you don't want to be on your chart the whole day. All right. So let's say you want to be checking your charts after every 6 hours. This right here is up to you, okay? So you can say I want to be checking my charts after 4 hours, after 5, after 6 hours, okay? So let's say you settle with 6 hours. I want to be checking my charts after every 6 hours, okay? And you came to your chart and price was right here. Okay, let's say it was up to that point that when price created this break, okay, you mark that, okay, price created a break on the 4 hour time frame, okay, then you came back after 6 hours. So as soon as you created a break, okay, you just noted that, then came back to your chart after 6 hours and price was right here, okay. So up until that point, okay, price would have made this higher low, okay. So this right here is where you will place your alert, guys, okay. So you go ahead and place your alert right here, all right, and wait for price to come back and break, because we want to, the way the strategy goes, as soon as we get the break of the last higher low to be created, then the strategy is in play, okay. So you will go ahead and just place your alert right here, close your chats, close your laptop, close your phone, and go do something else, okay. And as you can see, if you place your alert right here, price didn't come back all the way here. What did it do? It kept on going up, okay. It kept on creating more structure points, okay. So let's say after 6 hours you didn't receive any alert, okay. You came back to your chart, we're just assuming, and price was right here, okay. So you will mark this as your last higher low, guys, and this right here is where you will place your alert, because as soon as it hits this alert, you will receive a notification. Then you will know that the strategy is in play, okay. All right, so let me go ahead now and set the alert right here, okay. Let me just show you how you can set it briefly. So you just click right here where it says alert, okay. I'll just click right here, and then go ahead and just click create alert, all right. And I'm just going to put the value in right here, because remember, this blue dotted line is where we marked our higher low, all right. So as you can see, the figure is right there. So I'm gonna go ahead and just type it right here, all right. So it is 109, it's 109, all right, 392, all right, 0.02, all right. So that right here is the last higher low. So just go ahead and minimize this, because I want to get some room on the chart, okay. So as you can see, we added our alert, okay, and as soon as price hits this alert, we will receive a notification either by email or to our phone, all right, through the application, okay. So if you don't understand what I'm talking about, again, go and watch those first two videos, okay. It's where I explain all this that I'm talking about, okay. So now this right here is where I want you to be careful, okay, because we need a real bit, because as price is pushing down, okay, it will hit this alert, this alert that you set right here on the last higher low, okay. But you want to be careful, because we have fake breakouts and real breakouts, okay. Fortunately this time, okay, this right here is a real breakout, and the reason why it's a real breakout is because the body of the candle closed below. Okay, as you can see, this red candle right here closed below. Okay, you can see that, right? You can see this body of this red candle closed below. Okay, but what a fake breakout will be is, let's say we had this candle right here, because this candle right here would have hit the alert line. Okay, this, I'm talking about this candle right here. Okay, but as you can see, it just wicked. Okay, you can see that, right? You can see that small wick, and the candle closed above. So this right here will be a fake breakout, and because this right here will also trigger this alert. Okay, let me use this because it keeps highlighting it, okay, over and over again. Okay, so let me just use this right here. Okay, so if this candle right here, let's say, was at this point right here, this right here would have triggered your alert. Okay, but as you can see, it just wicked below and closed back up. Okay, the body of the candle closed back up, so this right here will be considered as a fake breakout. So you need to be very careful. Okay, this is very important. You want to get a real breakout. Okay, the candle just wicked below and then closed back up. Let me hope you know what I'm talking about when it comes to wicks and bodies. Okay, so the wick is just that stick, that thing, popping out. It can pop out either from the bottom or the top. Okay, and the body of the candle is where the color is shaded. Okay, this is the body of the candle. So what I'm talking about is this wick right here. So this right here will trigger this alert, but this right here will be considered to be as a fake breakout. So you will delete that alert and go ahead and place it again until you get a real break of that point. Okay, all right, so when you get a real break and when you confirm that this right here is a real break, what you will do, because I won't be needing this anymore, so just go ahead and delete this because I've already confirmed that this right here is a real break. Okay, so what I'll do is, let me go ahead and just also delete this. The next step is I want to draw my trade bracket. Okay, so let me go ahead and just draw it and then explain what I'm gonna be saying. Okay, so on the trade bracket, so let me go ahead and just mark this. This right here will be the trade bracket. Okay, so this right here will be a trade bracket. Now remember, trade bracket gives you two things. Okay, it will give you your entry, okay, and your exit in terms of stop loss. Okay, so since this was a pullback to the upside, okay, so the stop loss will be up here. Okay, and your entry will be down here. As soon as price pulls back to the trade bracket is where you want to take this trade. Okay, however guys, like I said, you could draw your trade bracket in two different ways. You could draw it from the last higher low to be broken to the last higher high to be made, or you could draw it from the last higher low to be broken to the highest point, in this case price reached. Okay, and the disadvantages and advantages to both. Okay, so if you go with the last higher low to be broken to the highest point price reached, okay, you will have, like I'm going to show you later, you will have a lower risk to reward ratio compared to this one, to where you will draw it to the last higher high to be made. But chances of price coming back and taking you out and continuing in your direction, okay, will be lower. Okay, so that's the advantage. Okay, if you draw it, okay, from the last higher low to be broken to the last higher high to be made, okay, you will have a higher risk to reward ratio. Okay, what that means is you will make more money. Okay, but the chances of price coming back and taking you out, okay, and continuing in your direction, okay, will also be higher. Okay, and so if you draw a trade bracket, the next thing is you want to qualify this setup. You want to make sure, is this setup at least a 1 to 2 risk to reward ratio. Okay, you want to confirm that first. You want to measure it. Okay, because if it's not a 1 to 2, if it's not at least a 1 to 2, you will not take this trade. Okay, so let's get our measuring tool, and right here we should get the short position tool. So I'll place the short position tool right here. Okay, place my stop loss up here like I said, and then drag my take profit down here. And as you can see, this right here is a 122.22. Okay, now let me show you what I was explaining earlier. So if I drag this up here to the highest point price range, okay, what that means is, let's go ahead and measure this trade. As you can see, it drops down. Like I said, you will have a lower risk to reward ratio if you draw a trade bracket from the last higher low to be broken to the highest point price reached. And as you can see, it dropped in terms of risk to reward ratio. So this right here will be a 1 to 1.57, which is not eligible for this strategy. Remember, we are looking for at least a 1 to 2. Okay, so let me go ahead and just place it back right here. Okay, so I'll place it back right here and then drag this right here. Okay, so as soon as you measure this and it's at least a 1 to 2 like it is right here, okay, so you won't need this measuring tool anymore. Okay, so we got a break right here, so wait for price to come back. Okay, all right, wait for price to come back. As soon as price, because what we shall do, like I said, we want to use alerts and pending orders, okay, to our advantage, because we don't want to be on our chest the whole day waiting for price, okay, to do its thing. No. Okay, so the next thing is, after we measure this trade and it's at least a 1 to 2, all right, the next thing we shall do, we shall place our pending order right here. Okay, so what you do is you just go ahead and just right click and then click on add order, and you will select your sell limit pending order. Okay, but I don't want to do that, and the reason why I don't want to do that is because I want to show you something, guys. Okay, so let me just go ahead and just mark this with the blue line, okay, and drag this trade bracket all the way here. And the reason why I made this video, guys, is exactly this. Okay, I'm not gonna be taking this trade. What I want to show you is what I've kept on saying over and over again. As you can see, if you place your pending order right here, that means you go ahead and just close your chart and go find something else. Okay, you set your stop loss, okay, then you set your take profit. Okay, so as you can see, price pulled back all the way. All right, it took you out, so it would have taken you out right here. Okay, then continued in your direction. This is exactly what I've been talking about, guys. So the reason why I made this video is to show you that this strategy is not a 100% winning strategy. It will lose at some point. Okay, and as you can see, price came all the way up, it took you out, then continued in your direction. This happens it can happen so many times. All right, it can happen so many times. It's part of trading. Losses are part of trading, so losses are inevitable, guys. Okay, so what most traders don't know is, because this is where people lose track or give up. All right, so as soon as they see the losses, they give up. No, losses are part of the game, guys. Okay, and if you're a trader, your role is not to eliminate the losses. No, your role as a trader is to make sure you minimize the losses. And how do you do that? Is by applying proper risk management, because proper risk management will guard your account. Okay, that's the only way you will stay longer in the game, by applying proper risk management, by risking a certain percentage of your account every time. Okay, and that right there should be in your trading plan. Okay, so people risk 1% of their account, or even less, okay, or 2%. Okay, but what I advise you is don't go above 1%. Okay, All right, so that's the reason why I made this video. Just wanted to show you that. Okay, so we're not, this video right here would have been a failed trade because they would have stopped you out right here, and then price continues in the downside direction. Okay. All right, so I think I've said everything I wanted to say. All right, and don't forget to subscribe to this channel, turn on notifications so that you receive notifications every time I post a video. Okay, go ahead and like, share, and comment, and I'll be seeing you in another one. Bye.